Hello, and thank you for joining the HVAC Mergers and Acquisition podcast. On this podcast, we're talking about how to prepare your business to sell to get the highest valuation and best terms possible, or how to acquire an HVAC company, right? And we're also going to be talking about merging HVAC companies together. So each episode will cover a little bit different topic, and we're going to keep them short but rich in content. And we'll also have some guests on occasionally as well. So looking forward to sharing some insightful content around either selling your business, buying an HVAC company, or merging an HVAC company. So this is all HVAC related. My background, I've been in the HVAC space 20 years. My family comes from 3 generations in the HVAC space, and excited to be visiting with you here virtually. So today we're going to talk about one of the things that may be the most important thing in preparing your business to sell. And it's a fairly simple thing, but it's overlooked, right? And that is your financials, right? You want to have your financials in order, especially when an investor reaches out to you or when you're ready to sell. But as early as possible, get those financials in order, make sure they're accurate. And that includes your chart of accounts. On your chart of accounts, you want to make sure you break out exactly where your income sources are coming from. Is it coming from maintenance? Is it coming from service? Is it coming from new construction or replacements? And if you're have other trades, break those out as well. HVAC, service, HVAC, plumbing, electrical, whatever, wherever those income sources are coming from, that's very important to where investors are looking at your business, right? You also want to make it clear where the owner pay is coming from, right? So is there personal expenses going through your business? You want to know what those are. You may have a line item on your chart of accounts for adjusted EBITDA, right? And you want to know what's in that adjusted EBITDA number. And obviously the easiest route is just not run a bunch of personal expenses through your business, okay? Because when your tax returns don't match your income statements, it always it could create challenges, right? So as clean as you can make those financials, the better, and have them ready. You want to have about 5 years of financials ready to go. So when an investor reaches out to you, you can quickly send those over, because these investors are looking at several companies at once many times. And if they have to wait for those financials, you may end up losing on a great opportunity for your business, right? And they may miss out as well, right? You may have a really good business, but just the fact that the financials aren't up to date could affect that. So you want to have 5 years ready. Make sure you have the chart of accounts breaking out your income sources and where your profit is coming from, and that's a great starting point, right? And that should start from the time you start your business to the time you're ready to sell, right? So always be ready to sell. You never know if you're going to get a really good offer. So hopefully you found that helpful, and stay tuned for the next episode.